Hello guys, this is Nikki, you also known as Faces Trader, and you're watching the Awesome10X live market update. This is a global market update. Actually, a couple of hours ago, I was just discussing with a friend how difficult really the Philippine economy is. And I still consider myself blessed that I'm able to transition investing globally. And I'm able to also help a lot of other Filipinos or non-Filipinos actually choose great companies to invest globally. And no matter what the US says that we are in a bubble and so forth, I'm actually very proud to say that we do have some interesting companies to really own for the long haul. We're truly investing in innovation. And I always discuss this that investing in the US is all about the future. It's not really about the economy. So unlike the Philippine markets, for instance, wherein we were talking about the lockdowns, I was talking to actual business entrepreneurs who couldn't actually sell their stuff because there's a lockdown in the Philippines. And so the drivers couldn't sell, example, like the delivery segment. Example, if you are operating a delivery segment, if a certain city is locked down, you couldn't actually deliver to that city. And of course, we also have been talking to some business entrepreneurs in the Philippines that's really getting hurt with the economy. The Philippine economy has truly been hurt. You've got a lack of jobs available. The job market is so tight. A lot of the businesses are in a slump. So, compared to the Philippine market and the US market, I'd say that it's really as if, because I see, because I'm in the Philippines, I could really see, the different tales. Like the US is booming, no matter what you call it, and then the Philippines is really in a, it's as if when will we ever recover? That's the kind of questions, because the Philippine economy is so reliant on so many businesses, so many jobs that are, in a way, it's primitive. It's not able to handle a resilient digital world. It's not like the 5G economy. It's not like artificial intelligence. We don't have machine learning. We don't have self-driving revolution. We don't even have a company in the Philippines that's able to actually help us in a, it's very little. I'd say, yes, from a sustainable energy standpoint, there are a few companies in the Philippines, but by and large, the entire movement of the secular trend trajectory, the ones that we are looking in a 5G, or in a 10-year horizon, most of the innovation truly is in the US. And so, in a way, I actually once shared in my profile, this is my profile page. In a way, I feel as if here I am looking at 10X Industries, robotics, the buying spree that are available if NVIDIA or Zoom Video is oversold, or when Tesla was oversold a bit, we got in. And I shared this meme, when the true flood comes, only ARK invests and everyone inside survives. I was telling my friend that in a way, I am a little bit happy to be able to help a lot of Filipinos who joined Awesome10X. In a way, they considered us, in a way, like ARK Invest of the Philippines, which I find it as a real compliment, because I truly see and respect ARK Invest. I do believe that in the long run, the path of innovation, investing in disruption, and in really great companies is the way to invest. And so whether you make 10X or 40X or 50X, that's just the allure of investing in great companies. So I hope that we can actually reach out to more Filipinos out there. The Awesome10X channel is really not about me. It's really about helping. It's just really helping people. You could argue that a global market update every day is something that I do love to share. It's my passion. My co-founder is also passionate in helping our reach across the overseas Filipinos out there, the OFWs. We talked about the Henrys. These are the high earners that are not rich yet. And whether they're Filipinos or not really Filipinos, we're happy that we are able to reach out to students across the world because of YouTube. We've been able to touch some lives like Americans. We're able to touch Americans, Phil Americans, span. We got to reach Mexicans, some people in Norway. So, it's touching that we are able to share our insights about the US, about innovation, not necessarily about US, but really about secular trends. It could be an Israel company like Innoviz Technologies. Actually, I was just watching a while ago one of our Awesome 10X names, which is CGRO. This is a business by Omir Kalaf. And Innovis Technologies and Collective Growth is actually now trading at just $11 right now at 10.94. So we do know that right now in the US market, there's a little bit like a SPAC winter. In a way, the markets right now in the US, in terms of SPACs, it's not as easy money as it was versus December, January, and February, which we actually are happy about that we got to ride that easy money move. Like we got we got so many SPACs that hit from about where we purchased $11. Then we got to sell it at $20, $30, $40. Some even reached as high as $120. You know about QuantumScape. Which we got solid state battery. Then of course CCIV, we got to sell about $60, buy it back at 22, 24, and last night it was $27. We got to, some of us continue to hold on to it. Anyway, Lucid Motors is Peter Rawlinson. But the point that I'm saying is that I think that the US market in general, and this is actually what I'm sharing for March 11, this is somehow my title: narrow and focused versus broad and spread out. The more that the market is gonna have a wave of corrections, it could be at 12,000 NASDAQ, it could be 11,000, it could even go deeper. But what you'll notice from me is that my strategy would be about focusing on companies that you truly believe is worth 10x. Being focused and selective is more essential than ever to create resilient returns and achieve that portfolio diversification. What tactical exposure do you want in this environment? And in this question, actually, I would argue that for me personally, I'm already happy with the 35% cash because I usually go margin anyway when I am bullish in the market. And to be honest, owning 65% long exposure in the market is considered slightly bearish already on my end. I don't usually go 50% cash. So I mean, because I can go margin, and margin is very low rates, like 1.59% interest rate in IBKR. So I don't believe in being too much in cash. But I've heard some people going 50% in cash. And I mean, I'm saying to them that, well, it's really up to you. End of the day, we always discuss portfolio diversification in the best industries. And so I don't see myself being thoroughly high cash levels. What themes and sectors appeal to you over the coming months and why? Actually, that's a question that I want people to understand. Months or years, I would never really veer towards my fascination and my investments on the clean energy route. So anything that has to do with sustainable energy, whether it be electric vehicles, whether it be battery recyclers, whether it be lithium miners, whether it be storage, like or even solar panel companies, I would always achieve that percentage in my portfolio exposure and diversify in these companies, LiDARs, etc. But I will be focused and selective on which LiDAR company I truly want to be in. So let's assume there's about 7, 8 LiDARs out in the market, or about 6 LiDARs actually that I know of in the market. I'll be more focused on just 2 if I like 2. You could argue that there are about 20 or so electric vehicles. I'll be maybe focused on about 4 or 5. So I am focused and selective in each sector that I like. Example, for solars, there's about like 100 companies in the solar world, but I'll be just perhaps happy with about 3. Those are the things that I'm saying, that I'm focused and selective in which companies I'm willing to hold on. What market trends are driving your decision? Well, the market trends that are driving my decision personally is I see that there has been extensions. First and foremost, I've seen a lot of the companies I like really do 10x in just 2 years, some even in less than a year. So it's natural for them from a market trend standpoint to just really reset in a 50% correction, a 10x move is 1,000%. We're not talking about just 100% move in a year. We're talking about a 10x move, right? So we've been buying something like C Limited before, e-commerce, right? And until now, you could argue that, well, it's still a 10x company or maybe a 3x company if you're buying at about $200 area. Nonetheless, you don't foresee, no matter how strong Shopee in Brazil is or in Southeast Asia, at some point, the resilient returns and achievement of that portfolio diversification has to also understand that, well, it's not going to go $500 yet. If you buy it at about $220, $230, it's not going to go $500 yet. Maybe in the next 3 years, 2 years, yes. But in the next 3 months or 6 months, can it really foreseeably go down to 190 or 200? It could. So if you allow your scenarios to tell you that the driving decision is not about the company being not a great company, but it's really just about the valuations getting overextended, it's all that. So consolidations are great. I don't see myself losing faith on the companies I like. Example, like I sold some C Limited at 280, I sold some Roku at 450. It doesn't mean that I don't like them. In fact, I do love them. That's the reason why I held on to them for the longest time. And they're 10x, right? But can I see them going down 30% lower in the next coming months? It is possible. That's why 30 or 50% lower from the highs, from the recent highs. And therefore, that tells me that if the direction in the next 6 months is perhaps more of a choppy market rather than an all-time high move, I think that being focused and selective is the way to go. At the end of the day, high-quality assets will always be in my portfolio, but it's a flexibility. We want you to be fluid in your returns. I took a look at some traders. This is a great share by by Madrid. He shared this in the Trading View, and he said that in the 1929 Great Depression, there was the Roaring Twenties, and a lot of the bulls actually are discussing that what's happening in 2020 is similar to the Roaring Twenties. You're seeing everyone go for the moon, the Mars, the euphoric phase, because of so much innovation out there. That is consequently, you're seeing machine learning, medical breakthroughs. You ask yourself, how could I not invest in medical breakthroughs when you're seeing machine learning and AI really working hand in hand, solving rare diseases that we weren't able to do so or process before because our computational knowledge, think about it. If you just simply look at Boston Dynamics right now, can you imagine what robots are able to do in the next 5 years? They can now dance, they can now jump. 5 years prior, those robots cannot even function at all. They're like stumbling. So, you could see the pace of innovation. It's not hard to see myself investing in LiDAR firms, such as, example, CLA, Angus Pacala. When you know yourself that, well, CLA already has a 5-year predictable revenue and already signed those multiple signed year agreements with 500 customers, and those customers are the bluest of the blues. We're talking about Amazon Robotics, Neuro, Boston Dynamics, Caterpillar, Microsoft, Google, NVIDIA, Qualcomm. Name any great blue chip tier company that's a partner of Ouster. So at $10.35 right now, I'd argue that, well, I have CLA at $13, but I think to myself, I'd like to buy more at $10.35, even if I'm down a little right now on my exposure on CLA. At the end of the day, did I sell some at 15? I sold half, thinking that 15.50. I noticed that the market was highly corrective, so I sold some at 15. But the same shares that I sold at 15, which is now into cash, I'm looking to buy that cash into $10.35 of CLA, because at the end of the day, you ask me in the next 5 years, do I think CLA is going to grow? The answer is yes, very predictably. So the market correction focuses me to really buy more shares of the companies I like, because at the end of the day, as I said, cash doesn't earn me 10% in a day, but high quality assets do. And high quality assets don't just go up 10% in a day. They go up 10x in a decade. And I know that. And I'm capable of finding the 10x companies in a decade or so, or sometimes even less. Just like how we found Roku and C Limited to begin with. So I am so much in the investing. I'm really investing. And if ARK Invest enables so many people, I tell them, if you're lazy and you don't want to invest on your own individual stocks, you could just buy your ARK Invest and cost average ARK Invest. I do believe in Cathy Wood, RK, ARKG, all of those ARK funds. But if you want to be somebody like me, I'm an individual stock picker. I create my own ETF, my own spaghetti sauce. I put the garlic inside. I put the tomatoes inside. I put the cheese inside. Consider the tomato example like a CLA. Consider the garlic like a CGRO. Consider the cheese like a Tesla. I rendition my own portfolio, my own spaghetti sauce that tastes well for me. And that's really what I teach in Awesome 10X, whether you're an inner circle or a global market update free listener. At the end of the day, we'd like to teach people to go back to actually it's not go back to their roots, because I'm always I'm never really in the Flintstone region. I've always been an investor on growth. I've always been a growth investor. It's just that some people, they don't know the growth inside. Example, when I was investing in Baidu at $99, I was investing in AI and automation and Apollo Taxi. I wasn't investing in the search engines of Baidu. Although Baidu is Baidu. It really literally means 100x. And when Baidu made an IPO at $2.70, it really reached $280. And when it fell to $99, I found myself so happy to get in, because Robin Lee is such an amazing CEO, and the technologies of Baidu were very, I'd say one of the top notch, and the market was just not, then at that time, it wasn't being appreciated. Right now, it fell from 350 to 250. Baidu dropped. Sorry, let me show you Baidu, right? So Baidu recently dropped from about 350 to about 220. I find myself buying this crash from about 250 to about 230 in the next coming days, with a real reason to invest, not really to about trade short term. So in the short term, yes, anything can happen. I can see that there's a resistance at 300. Some people might sell at about 280 because they're probably buying it at about $90 or $100 before, right? And they want to have some cash. That's true. But at some point in time, if you really believe in EVs and robo-taxis, and you see that the smart infrastructure in China can really be helped by Baidu, I'd say that there's nothing wrong to invest in your convictions and believe a little on your portfolio diversification formats. And so when people call about the dot-com bubble, the parabolic, the Dow Jones present day 2021, they're comparing all these bull markets in the past, the roaring 20s, the dot-com bubble, the Dow Jones Black Monday, the panic sell-off. Look at that. In the Great Depression, there was a huge drop. In the dot-com bubble, there was a huge drop. But right now, compare what's happening. Very little drop and then euphoria move. Very little drop and then euphoria move. We're actually coming out similar to the 1987s. I'd say. I mean, this is a very good chart because the bull market is reignited. People have been asking me, Nikki, don't you feel that the market is already overextended? It is a bear market already. And I said, no, I think that it's true that there are extensions. That's why I said pigs get slaughtered. That's why I sold my solars when it was high. But I kept my souvenir, by the way. And I'm looking to buy more of these solars when they correct downwards. Actually, I was interested to buy Sunrun at 48, 53, 53, 54. Yeah, I got some Sunrun, and I was bullish on it. And and some people ask me, Nikki, what about plant-based foods? I said, actually, for plant-based, I wasn't able to sell my Beyond Meat at 225 when there was the results of the Pepsi partnership, right? But you could see that from the results and the $1 billion raised in a bond offering by Beyond Meat, it tells me that maybe I could buy it at about $100 or $110. That's why I sold it at 170. I wasn't able to sell at 200, but I was able to sell 170, $150, 160. Yeah, I sold there. Because at the end of the day, I think what you should know is that I am a long-term investor, but I really know my companies well. So I know when it's and this is an example of knowing your company. If this was the history of Beyond Meat, I was aware of the volatility, of the range results. That's why I'm able to make 50%, 200%, 100% on Beyond Meat. Technically speaking, if I buy Beyond Meat today, I'm just like buying my shares for a cheaper cost when I sold them at about 200 before. I got to sell it at 150, those types of things. So if I could buy it at $100 or $80, of course I'll buy it. I love it. I love Mr. Ethan Brown represents to me the Tesla of his plant-based circle. So clearly, there's investor appetite for plant-based patties. That's why Beyond Meat was able to raise $1 billion on the back of strong demand. These people were able to get Beyond Meat shares, and they're willing to pay as high as $130 with the convertible notes redeemable for cash at any time after March 20, 2024. Only if the last reported share price per share of Beyond Meat common stock exceeds 130% of the conversion price. So at the end of the day, if you ask me, why are people willing to give money to NIO and Xpeng and Tesla? Because Tesla raised $5 billion at $500 before, and also $5 billion again at 700. NIO was able to raise $2 billion. Xpeng was able to raise $2 billion. If you look at their balance sheet, they're awash with cash. They're ready to produce all those millions of vehicles in the next 2 to 3, 5 years because they have to propagate electric vehicle revolution. So I think that at the end of the day, I don't look at the results, the quarterly results, because this is what Jeff Bezos has said. Every result you see today has been done by our team 3 years ago. So what's the point of reading today's results? It was something that we did 3 years ago. All of our efforts on Amazon Web Services didn't happen 3 months ago. It was done 3 years ago, 5 years ago, 6 years ago. So in order for you to determine next 3 years results, it's about looking at what I'm doing today, right? So what is Baidu doing today? Nothing but great news, guys. That's why I just love this dip, because it allows me, even if it goes down to $200, it tells me that, hey, we have really good, strong hands that will buy this, because only the buyers fundamentally would know what to buy. Because if we are transitioning from momentum expensive to momentum value, I'd say Baidu is a momentum value play. And that's something that I love, that people are mistaking that Baidu is a digital search engine when it's not. It's not like Google of China, although it is. It is like also in the electric revolution. And you could see that Teledoc Health was a company that I felt was expensive here at about 240 and 200, right? It consolidated. I got back in at 230 and sold it at about 299. I sold it at about 280. I didn't sell at 299. I am somebody who's really a hybrid. I love fundamental investing. I love secular trends. But I always emphasize to my class, that why do you think that December I've been saying stories about selling? I gave it as a free class. And then January, February, even if I'm choosing companies that I truly love, I always tell them, hey, pigs can get slaughtered. Extensions on cannabis names, you've got to sell your cannabis names. It's not going to be sustainable. Extensions on some solar names, it's gone 10x. Extensions on some wearables and digital advertising, it's gone 10x. We don't deserve all these 10x names, 10x moves in such a short span of time, because no matter how you slice and dice it, the business is not supposed to 1,000% in about 12 months. And so it was easy for me to take profits. In fact, sometimes at 500% up, I'm already selling. Because I find 500% in just less than 12 months already substantially great, to be honest. And some people were able to write 1,000%, sometimes 2,000%. And kudos to them. Kudos to me for getting in early. And I know that sometimes I sell early too. But of course, because I sell early, I don't get damaged as well, because I don't buy expensive names. Teledoc Health, however, is a company that I don't see expensive. So at the current levels, about 184, actually, this is a company that went from $10, $20 to as high as 300. So to put that into perspective, if you've been an investor of telehealth services in its early years, say 2016, you truly deserve that 30x money that you've made. However, what I noticed, as with all charts, all great 10x names do collapse 50%. And why do they collapse? They collapse because the early buyers wants to sell and unload. They want to take some profits into cash. They are probably buying a house. I don't know what the reasons they have. Either way, if you take a look from 2020, even if you've bought this around $100, here at $180, you're still up 80%. Only if you were buying this in about June, July, where you just break even. So I'd say that Teledoc plus Livongo Health, the acquisition is great. And all the doctors says this is number one. Take a look at the revenues. I'd love to buy this. A 50% discount from 300 is 150. I'm putting my eye on Teledoc if the correction deepens. And this is a company I'm looking at. It's probably a health play. It's not a probable. It's a healthcare play for me. And you could see that some people are saying amazing to see so many Teledoc bulls going quiet. Price is just back to a November, and this is a long decade play, 10-year play. And some people said, are you sure? I haven't shut up about Teledoc. True enough, we have a lot of buyers of Teledoc, and they're very bullish. And this drop is just something for them to buy more. I'll tell you a company that I'm willing to buy below 2 and add positions. This is American Battery Metals. I was telling my clients that American Battery Metals has gone literally from 50 cents to as high as $5. 10x in just less than 3 months. December, January, February. And the 10x move there is, of course, falling 70% after. It's very predictable, right? After you 10x, you go down to about $1.60 or about divided by 3. 70% down. So it's now at 160, a support. I bought there 160. And I would love to buy even a $2 below. And why would I love to buy this, even if I know that in the long run, in the short term, it's probably going to just get trapped at about $2.50. You could see that those who got in at about Friday last week at about 160 managed to be able to get out at 250. But why do you think somebody was willing to buy American Battery Metals at 250 in the first place? You should argue that they are building the battery metals recycling plant. This is a video about them. This is 4 minutes. American Battery reveals their latest permit advances to build the battery metals recycling plant. Let's watch this. It's about 4 minutes. Oh, wait. Let me just fast forward to maybe this part. So, wait. Actually, no. You can just watch it yourself. But the point is that you could see that the CFOs, the CEOs actually come from Facebook and Tesla. Now, if American Battery Metals was a pink sheet company that had no chance to go NASDAQ listing, I would never touch this. But I do believe that this battery play is actually one of the most important companies in the next decade ahead. And of course, I just want to share this chart as well, something that the bulls will like. Tesla has never been better in this chart. The first car the Chinese bought simply seems to be a Tesla this February. You're comparing BYD, NIO, XPeng, Li Auto, Tesla. Although on a year-on-year basis, all of the Chinese electric vehicles were actually up 500% year-on-year. You're seeing that month-on-month, Tesla is actually gaining ground. That said, do I like the entire revolution? Yes. That means I'm willing to buy BYD, NIO, XPeng. I don't have a Li Auto, but Tesla, yes. So I have all these 4 names. I'd like to discuss on SPAC winter strategies on SPACs. Usually on SPACs, the companies I like, such as AACQ, Origin Materials. If you ask yourself, does Origin Materials truly have a partnership with Danone, Nestle? The answer is yes. And I see this drop actually more of an opportunity to buy it, with the market actually paying $10.50 only for all these wonderful SPACs. And take note that Nestle Danone is an 11% owner of Origin Materials. Within the next 7 years, actually within just next 6 months, I'd say that it's impossible for me not to see Origin Materials go up materially over the next 6 to 12 months. You already have the revenues booked. You already have the partners there. So nothing prevents me to see these companies going well. And I do believe in biodegradable plastics, as evidenced by my ownership of Danimer Scientific and Roche, which is Pure Cycle Technologies. Bought these SPACs before at about $10, $11. Danimer went to about $50, $60, sold some at about $40, $30. And then Roche is now trading as 25, I think. I sold some Roche for cash. Here, 25 and 30 seems to be the resistances, but you could see that I was there buying at about $11. So I do have cash, and I've been what I find is a cheap SPAC, like $10, $11. I do put my SPACs at $25, $30 to the $10, $11 SPACs. That's my SPAC winter strategy. And CGRO is also one SPAC that I love. It's now trading at $11. So these $11 below SPACs, I'm willing to buy and hold them. You could see partnerships with Magna, Aptiv, BMW. You've got partnership with Samsung, SoftBank Korea, Dalex Motors. These are tier one companies and OEM partners. And I think that's what most people who are buying SPACs are not necessarily knowledgeable of. So collective growth, even if I've bought at about $11 above, I'm willing to average down here at about $10.90 or even $10.50 in the next coming days. While it's very clear that there's sellers in the short term at $13.50, perhaps they needed the cash or they have margin requirements to settle about, I'd say that in the short term, all this noise will only make us more winners because we're getting great companies that are, it's undoubtable to me. It's an irrefutable fact. As robotics continue to grow in the next 10 years, you've got CGRO and CLA playing at the heart of that space, just as much as I believe in NVIDIA. So I'd say that it's been a long discussion. It's 30 minutes already, but that's some of the things that I've been discussing in my inner circle classes. Hi, Nikki. Your global review helped me a lot. I transferred also my funds to global, but I kept my position AC Energy. AC Energy is a sustainable trend. I think like 7 to 8, there are sellers, obviously, because it's extended. But will it go back down to 2 or 3? I doubt it. So, right now, the solars, I sold some of my solars in the US when it was peaking. Like SunPower went $50, and then right now, SunPower is about $30. So $30, I actually like to buy some of them. Perhaps if it goes lower, like say $20, I'll be more happy to pick up these solar companies because I really see that the world has nowhere to go but solar. It's not going to go back to fossil fuels or oil. That's truly my belief in the next 10 years. Hi, do you mentally prepare before market opens in the US, whether it's a bear or bull market, and even if it's so volatile? You know what? I am of the camp that we are in a bull market. I just see that the market has gone extended. Take note that the US went from 6,700 to 14,000 Nasdaq. We doubled their money. And actually, Awesome10X didn't double. We made like triple, quadruple, double, more than double. So obviously, extensions need to get some drops. Like example, let's say you got ASEN in the Philippines. We're purchasing at 2 peso, right? 2 peso, 2.20, 2.30. It rose to 7, 8 pesos. At some point, hey, even if it went to 10 pesos, at some point you'll tell yourself, you know what? I'm not a genius. Why did I deserve 500%? Okay na sa akin yung 200, 300% eh. So you will trim. And then, it doesn't mean that you don't believe in the story and the narrative, but you yourself know, take profits muna ako. And that's what I'm happy to do. I'm happy to teach Filipinos, happy to teach non-Filipinos. I'm actually happy to teach everyone. That's why YouTube is free. I like to share global market updates because if it helps people to invest long-term with the right companies, it's okay. And so I can understand the long-term holders of BTCs, the long-term holders of Teslas, the same way that there are long-term holders of NEO and XPeng. You gotta respect them because end of the day, they have low cost, low cheap costs. So I don't look at bull market or bear market because you know what? During the Nasdaq 7,000, everyone's calling it a bear market. I've been buying it because I've been seeing, hey, you can't tell me there's a bear market if Shopify is going gung-ho, helping so many millions of retail customers go from offline to online. So Shopify was something that I bought at about $400 during the Nasdaq drop. And of course, Shopify right now is 1.1. So it even went 1.4. But before the correction, how do you know which sectors to concentrate first in buying the drop in a broad market? Because I check all sectors. I know that reopening themes are very strong right now, but at some point, I see myself not willing to buy some reopening themes because how could Starbucks continue going up? I'm okay buying Starbucks at about $90 or $70 before, but $110, even if it can go 140 or 150, that's what actually does not, I mean, that's what I'm saying. I couldn't buy SunPower at $40. That's why it prevented me to lose money when SunPower is going down. Because even if 40 went to 60, I couldn't value myself seeing, I'm willing to buy 7, 10, 15. In a way, I was already at 16. I was already a little bit willing to buy 16 and 24. Anyway, I believe in the revolution. But I'm not really willing to pay 600% higher, at $42 above when SunPower is trading like that, crazy. I wasn't like participating in the craze. Like, I might not be selling them because like 40 can go 50 and 60. Kind of like QuantumScape. I'm not willing to buy 40, 50, $60, even when it hit $100, I was only willing to buy the drop at about 40, but only traded it 40 to 60, 70, because at some point, I said QuantumScape is just a 7-year solid state battery technology play. So it's my knowledge of the companies that helps me. It's not about the market before the correction. I've been making money ever since NASDAQ 10,000. June, July, NASDAQ is 10,000 to 12,000. But why am I able to get double, triple, quadruple returns? It's because when the market was sleeping, and I'm a selective picker, I'm very fundamentally selective. You can always find companies that will grow double and triple no matter what the index does. At the end of the day, the index is what? It's Apple, Amazon, Facebook, right? If you're not buying index names, you're buying actually companies that are in the Russell 2000. What do you care if NASDAQ fell 5,000 points or something? Well, of course, it will affect, but it's not as if like the company itself is really going to go drop 50% if their revenues are truly doubling, quadrupling. So the beautiful thing in the US, by the way, is that I'm happy that the core fundamentalists there are actually appreciated. And I'd say that I'm more of a hybrid. I know fundamentals just as much as I know my technicals. So it's a pleasure to actually help people invest well. So do you own any global stocks other than US? China, Hong Kong, Canada, or Australia? Yeah, I do. In China, I do like Yeka 9923. I do like 1211. I like Geely 175. I like Razer 1337. I've loved Tencent ever since. Of course, Alibaba ever since. JD, Pintuatua, which is Chinese companies but are in the US. Canadian companies, yes, I've been buying some Canadian companies like WeCommerce before, but I traded it out. I had some Canadian cannabis names I've had before. I used to have some Charlotte's Web. I used to have some Hexo. I bought that in Canada. Green Thumb Industries, True Leaf. These are Canadian names. Cura Leaf. So in Canada, I've been mostly in cannabis. So I've been, I forgot, some blockchain. Yes, I have some Canadian blockchains, but I trade a little of them. So Bitfarms, Hut Mining, Hut 8, I'm okay with that. For Australia, I had Dragontail Systems, the drones, but so far recently I traded out of it because when I needed some cash, I kind of sold some of the positions that I didn't want to have a long-term horizon. I needed the cash to buy more of my other electric vehicles. Like I needed the cash to buy more Teslas or more Xpengs or more Neos, those types. Any advice would you give on Verb Technology? So Verb Technology does not strike to me as a super strong company. I could be wrong. Took a look at it. It's a fintech. It's a $100 million company, market cap. So I might be wrong, but it doesn't strike to me so great that I can't afford to resist it. You are smart, intelligent. Thank you for that, Miss Shanta. So I really love to help people. So and in some way, like the Awesome10X investing channel is just my own way of helping people invest globally. Because in the Philippines, we have so many companies that are really reeling, private companies reeling to the bankruptcy because, you know, they don't have liquidity, they don't have employees to pay for, you know, labor. And, you know, it's in a way, I think that I like to share my knowledge and my ability to find and detect great companies. Can you imagine like a person who lost his business, at least he made some money on Tesla and Xpeng. You know, that's a huge thing. Like for him to make some money on Asen or Unity or Palantir, for me to be able to help him uh, escape his, you know, escape his pandemic job losses. You know, some people lost their job, some people lost a lot of money in their own business. And so, you know, in 2020, I was just more in helping people bounce back. You know, I was just helping them. Hey, if you're gonna make some money abroad, you're gonna make money on your Teslas, your lithium miners like SQM and Albemarle, on Ganfeng Lithium, 1772. If it fell, that would be a great company to get in. 1772 went up so much. That's why I wanted to go down too. No, so this drop is great because look, I was willing to buy it at 52. It's now $100. I still can't buy it there. So what I'm saying is that, you know, nobody needs to complain of the correction because this went 500%. 30 to 150, a drop to 100. I mean, I'll be happy to get it at about $70 maybe. So it's really about knowledge, guys. Do you know what you own? End of the day. What platforms do you use to buy your stocks? How could I find small cap stocks before they go public? I use IBKR, pink sheets. I could buy small caps through IBKR, but not too small. Like for some reason, example, Indoor Harvest appeals to me, INQD, but I couldn't buy it because it's too small. Apparently, it's just a $3 million company that I can't buy. But if this one you can get in at one penny, I think this one will go five pennies or 10 cents. No, you'll 10x your money with Indoor Harvest. The more you study this cannabis name, you'll be surprised how wonderful the company is. Zomedica ZOM was a company that somebody told me about. ZOM, it's a veterinary penny stock play. Heard about it. Looks like it's a buy if it drops. So it's gone up from about 20 cents to $3. Among these penny stock names, I am so far I have studied well American Battery Metals and blockchain, Humble Pay. I'm okay with that. As for Zomedica and Ocugen, people told me about it. I am okay, but I haven't studied it per se. So I know what they do. So this one promises to help COVID-19 and eyesight and so forth, pharmaceuticals. Zomedica is helping veterinaries, right? So animal related veterinary diseases. I'll be honest, I think that there's a 10x move in a lot of pink sheets, but I'm not too familiar. POI, I like that. You know more about POI? I have POI, Predictable Oncology AI. POI, I got in at $1 actually. I bought some at $1 when it crashed. I think that it's gonna go back to about $2. So I'm gonna sell at about $2. I think so far it's ranging $1 to $2. Predictive Oncology AI. So yeah, if you look at predictive oncology, you'll learn more about the company. It's a company that similar to the CM Lives, right? So precision medicine using AI, develop personalized medical treatments, replicating the body and extraordinary vaccines, data and AI-driven services. I like the company. But so far, I also know that this market correction is asking you, actually what the market correction is only doing is just asking you whether you know what you own. Is CCIV better than Xpeng? CCIV has a US North America market. Xpeng is a Chinese market and European market. So I like both, honestly speaking. So I'm okay to have both. Do you offer portfolio management? I don't offer portfolio management, but everyone can see what I own. I'm very much transparent in the companies I love. So in my subscription service, I do help people consultation so they can show their portfolios. Then I analyze their portfolio, help them depict what spaghetti sauce works for them. Roblox IPO, I like Roblox, but at $45 billion, I think it's expensive. Roblox was a discussion that we've done ever since last year. We said that we like the company, the metaverse, but compare what Roblox valuation today is versus Unity, and I could argue that I'd have two for the price of one. Like if I have $45 billion, I could buy two Unities for the price of one Roblox. So I'd rather get Unity software than Roblox today. I think Roblox, it can go $100 billion someday. But versus a 2x move and versus like getting a 5x move on Unity, I'd rather have Unity. Is the right price of Roblox? I'd like a 20 billion, 2025. If I can't get it, it's fine. I mean, I'm okay to pass up on the opportunity because I passed up on Snowflake. Example, data warehouse. When Warren Buffett got in, it went 100% spike. No retail could get into Snowflake. So I think that's what happens when a company is so hyped up. I wasn't able to get Airbnb, even if I like Airbnb, because it was already trading at $100 billion valuation. You kind of think of you kind of have to think as well. For $100 billion, do I want to buy Airbnb, or do I just buy simply a lot of other companies, right? So I think that you have to ask yourself. The problem of most people is that they just like to buy S&P 500 or NASDAQ, but what's an index? End of the day, why do you own an index when you can just buy the company inside? What do you really believe in? Tell me, if you believe in e-commerce, then shouldn't you own Amazon? Now, if you find Amazon expensive, of course, Amazon and cloud computing, then we can find you e-commerce ideas like Shopify or C Limited or JD or Pinduoduo. Like, right, that's what I mean. Like, tell me which industry you believe in, and then I tell you what. So I don't really believe in NASDAQ targets. To be honest, I invest in the stocks. So I don't care if the NASDAQ is 10,000, 12,000, or 14,000. Tesla went 100x without the need for the NASDAQ. Tesla went 10x in 2 years' time without the NASDAQ. If you were buying Tesla at about $50, if you were buying NIO at about $2, what the hell do you care about the NASDAQ? What you care about is how much innovation and research is happening in the batteries of NIO such that they're able to do this battery swap technology. How much electric stations are being built today if you are owning companies like ChargePoint at a lower price, of course, or EV boxes or the Voltas. So I really don't think that anyone who talks about the NASDAQ is a fundamentalist, because the NASDAQ will never grow your money 10x. The only companies that will go 10x your lifetime or even 100x your lifetime is to own the companies like Amazon before, is to own Unity in the next 5 years, is to own Palantir for the next 5 years. So I don't care about the NASDAQ. If the NASDAQ falls and Unity falls to $75, thank you for the cheap shares. I would not stop investing in the companies I believe in. And I'm not in denial. At the end of the day, ask yourself, how many mobile games are there and produced with Unity? So what's the NASDAQ? It's nothing more than a bunch of somebody's pasta, his pizza pie. My pasta is better than NASDAQ. To be honest, I've been outperforming the NASDAQ ever since I invested in a 10x manner. So what do I care about the NASDAQ? I don't care about the NASDAQ and the S&P 500 and all these ETFs that people are talking about. That's for lazy ones who don't know anything about the companies they own. Anyone who knows about Tesla knows every ecosystem partner. They know about Ganfeng Lithium. They know about CATL, right? They know about that. Now, if they don't know, they're not a true disciple of Tesla. They know nothing about the companies they own. They just preach about Tesla, but they don't know about battery, lithium recyclers. They don't know about that. So they don't deserve to make 10x. Bye-bye.